Welcome, everyone. And I'm just about to hand over to Rachel, who will be looking after this fascinating session on virtual banking in Southeast Asia, picking up, obviously, the experiences from here in Hong Kong and the different approaches, whether that's retail, whether that's SME, whether that's combining with retailers in some cases, whether it's spinning off with a challenger bank or starting afresh from lending. So I think, yeah, delighted to see you all. I can see we've still got some people joining, but probably good to kick off. And very nice to see that for once we've got our gender ratios the right way round on a panel. So that's lovely. So Rachel, thank you very much for organizing this. And obviously Karen, Pauline and Jojo, thank you very much for joining.
Well, thank you, Anthony. I'm really happy to bring forward this event tonight on digital banks across ASEAN and thinking about digital banks both in the developed markets such as Singapore and then moving through Malaysia to more emerging markets in the Philippines. Hong Kong in some ways kicked off a digital banking move with its first competition on the virtual banks, and that has now moved across to many markets across Asia. And so we're really happy to be able to talk tonight about what's happening in Singapore, Philippines, and Malaysia. I think a number of people here know that Malaysia is currently accepting applications due on June 30th for their digital bank licenses. The Philippines has a rolling license program. So there's a couple of digital banks that have already launched, converting from thrift banks to digital banks. And in Singapore, the licenses have been awarded, and I think people there are very busy setting up the banks. So we have invited the three very great speakers to talk with us tonight about what's happening in their respective countries. First, we have Karen Puah, who's the new president of the Malaysia FinTech Association. We're really happy because not only will she be able to talk about what's happening in Malaysia, but with this, we're able to build a relationship with the Malaysia FinTech Association. We have Pauline Wray, who is from BCG Expand Research. Pauline did a lot of the research on what's happening with digital banks globally for the Singapore FinTech Festival last year, and has also been involved in help develop some of the applications for Singapore. And we have Jojo Malolos, who is the CEO of JG Summit's venture firm, JG Dev, as well as their analytics group called Davi. And he, as many people know, has been working with Tyme, where I am, to create a digital bank in the Philippines from JG Summit and Robinson's Retail. So with this, I think what we're going to do is start with Pauline to give us a little bit of the context and what's actually happening with digital banks a little bit globally as well as in the region. And she'll present some research that they've been doing at BCG, and then we'll move into the discussion. So handing this over to you, Pauline.
Thank you, Rachel. Great. Thank you for having me here. It's fantastic to be part of this panel and to continue talking about such a hot topic for us in the region. So I actually wanted to start with, first of all, some numbers, because where I sit, which is the FinTech business unit, the FinTech Control Tower, we're all about what's happening in the trends in FinTech, but also about taxonomy. So I thought we'd share some of our just hot off the shelf, some numbers that are coming out, which is basically, as you can see here, FinTech overall, we're not talking digital banks only, we're talking the entire ecosystem. Globally, what we've seen is that, despite everything that's happening and considering that, 2019 was a record year, 2020 was a record year in terms of equity funding, 2021 Q1 alone has attracted already 60% of the total funding that was raised in 2020. And because we're on the digital banking topic, thought it was also interesting to show where this funding was coming from. Sorry, I skipped a little bit. So a big chunk is actually driven by digital challenger banks, and the way we classify them in our taxonomy are those really that focus on both segments, right? SME and direct to consumers on the retail side. And as you can see here, you have a mixed bag, different types of banks, some of them that have licenses, and actually in actual fact, yeah, majority of them have licenses here. But now what I'd like to also focus on is looking at who these digital banks are. So if we go one, if we go here, so taxonomy is really important because you go to a lot of these panels and then you're basically talking about digital banks, challenger banks, disruptors, and so on. And sometimes you have wallets, sometimes you have payments companies, and sometimes you have challenger banks that don't have licenses, some of them that have licenses. So the way we've categorized them here, as we looked at a wide variety of players, is that in two big chunks. First of all, your challenger banks. So your challenger banks, as stated here, as you have two types. You have your FinTech banks, which have a banking license. Either they've applied for it once they've launched with previously with a prepaid card, like would be the case with Monzo today, or they've found a vehicle to like it would be in Australia, to have that banking license from the onset. Or then you have your non-FIO consortiums, which is actually a large majority of the types of challenger banks that we're seeing in the region that are launching as a group to bring together quite a number of different industries, and also and access to already digitally savvy customers. On the other hand, you have neobanks. Neobanks can go into the market with a partnership, so banking as a service, another bank that provides them with that banking license. Finally, you have your independent as well, who are able to launch with a quasi license that allows them to keep deposits, for example, and do everything that a bank would do. So with that in mind, just to give you a little bit of, so you can recognize some of the brands, this is what we mean. So in the case of the FinTech banks, you have the likes of Monzo, Varo, Zynga, who unfortunately closed shop in December last year. Starling Bank and Grasshopper Bank, which you also see that they launch with something else, and with a prepaid card or with payments, lending, investments, and then they work towards acquiring their own banking license. Then you have your non-FI and consortiums, the likes of Kakao Bank, for example, which I'm sure all of you are very familiar, or Orange Bank, which are also pretty they play in the African markets. Then we have neobanks. The first ones being partnerships, so the likes of Aspire, for example, here in Singapore, where the bank partner is DBS, or in Australia you have Bendigo for App Bank, and so on. And then finally, you have this independent section, the neobanks, which can operate using what we call a quasi license. So in the case of Wealthfront, for example, the broker-dealer license in the US, it allows them to actually keep deposits, take deposits from their savings accounts, savings and investment accounts. And with that, I thought I first of all lay it out there and give you a bit of an overview what the taxonomy was for today. Okay, so should I kickstart maybe with what's happened in Singapore, or pass on the hand, because I could speak forever.
Why don't you say a little bit about what's happening in Singapore to start? And you can see that we've already questions coming saying, can you share the deck? So that's great too.
Okay, yeah, absolutely. So look, in Singapore, I still remember something like the 23rd of June 2019. It was a Friday, and I think the beginning of our holidays when we can travel, which meant that a lot of us in the consulting world spent the summer working with a whole bunch of individuals and corporates that wanted to apply for the license. All in all, so what the proposition was from the MAS was to come to the market with initially two types of licenses, a digital full bank and a digital wholesale bank. And the three main objectives of this was improve financial inclusion, drive innovation, and also encourage competition. Finally, in terms of the timelines, like I said, 2019 and 2020, again, and 2020, it was announced, I think 4th of December or something, just before the Singapore FinTech Festival, 4 licenses, which was really interesting because actually in terms of the applications, we had 21 applications and pretty nice, I have to say, a really nice group of consortiums were coming together, which were bringing from the telco, retailer, e-commerce, ride hailing, online media, and financial services and fintech. We're bringing quite a number of interesting types of access to customers, access to SMEs, digital savvy as well customers that they would have already brought in the platform. And in the end, 4 licenses were awarded: 2 digital full bank licenses for Grab and Singtel, so telco and ride sharing, but a lot more, right? Grab Financial provides everything from lending, payment, investments, and insurance. Digital wholesale bank, and SCA, so C, which is e-commerce, gaming, and financial services as well. Then on the digital wholesale bank, you have Greenland, and Minipo, which is really real estate and financial services. And then on the digital, and then the last one being and financial, which everybody knows, right? Tech giant and financial services. So all in all, pretty strong consortium, and really the combined value proposition and the access to some of these SME and digital users and the frequent interaction that already these platforms provide should be quite an interesting piece to see over coming months.
Thank you, Pauline. It's quite interesting to see. It will be very interesting to see what the take-up is in Singapore and really compare that to what it's been in Hong Kong. So Jojo, Philippines is quite different. I mean, when you talk about financial inclusion and financial access in Singapore, and then you look at the Philippines, it's just a completely different discussion. So what are some of the unique things that digital banks need to have when they're going into true emerging markets to make sure that they can acquire customers and serve them well?
Hi, good evening. Yes, the Philippines is a unique environment by which we are looking to probably install a digital banking infrastructure, but it's not new. It's not new in the Philippines to be introducing digital innovations. Quite recently, there's been a lot of banks which have come into the play in the Philippines, claiming to be the first ever digital banking institution. We had CIMB, we have ING, really offering something all digital. And then we have FinTechs. We have FinTechs which have really penetrated the market by creating another digital instance by really transferring all cash transactions into the phone or into other digital means. But to Rachel's point, the key really in the aspiration of the government and or central bank to reintroducing the concept of a new category in the digital bank is really born out of by giving it another shot in terms of really penetrating the base of the pyramid, right? So even with all of those introduction of fintechs, of all of these digital new platforms, wallets, new digital banks coming in, it remains to be seen whether the effort has been successful in extending to this unbanked, which is around 70% still. And then use them to effectively, formalize their entry into the mainstream financial services. So the recent initiatives of the bank to create a new category in the banking system, which is called a digital bank, is just one of those efforts. So they have recently released guidelines in the issuance of digital bank, and then there's a lot of interest that came in, mostly from non-banks, but there's also interest from banks and some fintech organizations. So, and the cornerstone of this initiative is really around making sure that this gets into the hands of the unbanked, those who are not capable of transferring money into their account via a switch or buy another from their bank account, right? So those who are actually getting the cash out of their homes to pay their loans and actually doing it digitally. So this is the challenge to all of those applicants, because digital banking in the Philippines is all about it has no branches, no physical branches. There's just one office, and the ability to be innovative, as Pauline mentioned, is also one of the criteria, because you're not expected to come up with similar products as those of banks. So we are in the middle of an application process together with Tyme. We have lodged our interest into becoming one of the successful, hopefully successful applicants to have a digital banking license, and using our ecosystem, the ecosystem of the JG group of companies, the JG Summit group of companies, we should be able to really focus on executing a digital bank instance really at the heart of the base of the pyramid.
Thank you, Jojo. I mean, I think it's going to be interesting to see which banks and how, if they can really get to that, and move the dial on the unbanked part, which is so high in the Philippines. Karen, there's the competition that's going on right now in Malaysia, but we know Malaysia has, similar to Singapore, about 97% are banked. So, but financial inclusion is also part of the requirements for the application. So where do you see in Malaysia the need for digital banking, or is there, first of all, is there a need for digital banks, and if so, where?
Thank you, Rachel. Thank you, Hong Kong FinTech Association, for giving us the opportunity. So I think the premise for any applicant will be unifying and integrating end-to-end business processes in real time to manage the spend, run efficiently, make data-driven decision, and innovate at scale, right? But Bank Negara is very clear about the direction. Applicant must demonstrate a strong value proposition, focus on the unserved and underserved. So it must serve the economy and contribute to the well-being of Malaysians. So who are these financially underserved is the question, right? So we're looking at the self-employed or the gig economy workers, first-time borrowers, retirees, and those who just joined the workforce, right? But I think on one category, very simply put, you can look at the 3 M's, which is the micro SME. If you're looking at the target audience and how this is going to serve the customers, is the micro SMEs one, and then the millennials. I think Ron Chef said it very well. They rather go and see a dentist than to go to the bank. And then the migrant workers, and most importantly, at least to a lot of us here, is women inclusivity. So Malaysia is home to 2 million documented migrant workers, plus and minus the undocumented workers, which is a gray number. So financial institutions, so in this case, the fintech companies, working with the technology service provider will still require support in manpower and resources to build and expand the agent network. So this can come even in the form of merchant acquisition. So we saw the reality of things when the government gave 50 ringgit or slightly more than $10 to every Malaysian adult through one of the 3 e-wallets. And we saw people in the areas that's outside of the main cities having no place to spend the money because of infrastructure. And then also the lack of having a smartphone to get access to the e-wallets, right? So I think for Malaysia, the main key barriers are mainly building a level of trust. And my cousin is one of them. She will never do anything online. And then number 2 is the literacy and understanding. So for Malaysia, the focus is always on the B40 or the bottom 40 percentile in terms of the income per capita. So when your worry is to put food on the table, reading the glossary will never be on the to-do list. So the ability to comprehend the concepts, the practical implications of using digital finance product can be too much for this group. So in this case, it's a bit of a too little too much, complicated features, eKYC, or even distracting the users from the core function of the product. And then number 3 would be overcoming the status quo status. Okay, so for example, the micro SMEs. Yes, the merchants adopt digital payment platforms, but cash transactions still makes up the vast majority of their transactions. Customers prefer to pay cash, and also suppliers would rather receive cash. It is very cumbersome to buy bananas and then sell it to the small vendor and then expect the payment via e-wallet, right? So I don't think we have reached the critical mass to fully adopt cashless environment. And then number 4, which may be controversial to some, but would be the fear brought into the tax net. So I will stop here. Thanks.
So, I mean, there's a number of different challenges based on kind of how to build trust through the, and is that going to be solved by digital banks, to how, you know, cash is really easy. Cash is frictionless still. So why go digital? But I mean, if you're hearing this about Malaysia, Jojo, how do you think in the Philippines you can build that trust as well and also address the cash issue, which I think is even more in the Philippines?
Well, yeah, that's a very good question, and I'd like to share what I heard from our central bank governor when we were talking to him about bringing this digital bank infrastructure into play. And his main, his idea is that I just want to maximize. I have 2 objectives. One objective is to make sure that in 2023. 50% of all transactions happening in retail will be at least 50%. 50% of all transactions happening at retail is digital. And then he said that in 2023, in 3 years' time, I also want to have at least 70% of the Filipinos, of the adult Filipinos, will have a transactional bank account or transactional account. And he said further that I don't think I can see a cashless society in my lifetime. So the whole idea is when you get to the unbanked, there has to be a realization that these people will never get cash out of their hands. They live and breathe in terms of having been able to see that, and that's partly because of awareness. That's partly because of some of these people are actually cashless already. They don't have cash to start with, right? So so the whole idea is that how do you create an impetus or create a situation where they would find value in understanding what cash is all about, and that will always start with giving them a livelihood program, a decent way by which they can earn. And so it goes to the impact of having an economic logic by which they will use a digital transaction, or they will use digital cash for that matter. So what we're doing in the Philippines is really getting to realize that. That's why what we're bringing into the market is really a hybrid approach to saying that we still think that cash is going to be king, but at the end of the day, the important thing is that if there's a way by which we can convert this digitally, convert it, get it from them, get it from the unbanked, and then put it in their bank account, whether through an agent or whether through somebody else who will help them, then that's good enough, provided we were able to hit the 2 metrics wherein people will start creating their own transaction account, and they will be doing transactions digitally. And doing transactions digitally may not be doing it yourself. It can be like what I experienced in Cambodia, because Cambodians, they don't trust themselves in doing digital transactions, but they will trust others. What they do is that, I get my cash, I go to an agent and ask them to pay my bill, right? Because I don't want to have a mistake of sending something more than what I should be sending. So maybe that hybrid combination, that hybrid approach will work, and that's what we're trying to look at.
I think as much as we have conversations with people who say that the world is going digital, the reality is still in the US, Klarna put out a report that 65% of transactions are still in cash. So definitely across many markets, you're going to have to think about cash. So I'm not sure Singapore is one of them. So Pauline, you have a group from the Hong Kong FinTech Association, and we have seen our virtual bank start, and many of us are users of them. But in the back of your mind, it's always, is this the primary account, or is it a nice secondary account that's so easy to use? And how are all of these virtual banks in Hong Kong and Singapore going to make money? So you looked at a lot of these applications. Do you think that these new banks in Singapore are going to make money, and who's really going to use them as the primary account?
Yeah, let me know. I've been having some. I can see some people moving slower and so on. So let me know if I lose that bit of connectivity. So yeah, so good question. Look, I think in terms of one of the interesting pieces about the fact that we're bringing consortiums and similar to you, Jojo and Rachel, you're bringing a lot of richness of data, right? So on the one hand, yes, we are. I think from a banking penetration, we're super high, right? I forget now the numbers, but it's something like pretty much 98, 99%. But myself, I always tell the story, and I can't believe that we're 2021. But when I arrived in Singapore in 2008, and I looked to both open a personal account, so a retail account, and as an entrepreneur opening my business, a corporate account. Impossible to do either. I had to piggyback on my husband's, who came into Singapore with the corporate job. But as a person, I wanted, people told me in Singapore, hedge, you get different offers for different restaurants, so get 2 different local accounts from 2 different banks. So we tried to do that. Impossible. I had to piggyback on his account, and which was horrible because I had to ask permission for everything. And then on the entrepreneurial side, pretty much I couldn't. So in the end, we had to go with the bank, the business account that I had in the UK, and that continues to be an issue, right? That continues to be an issue, and it's not just about opening an account, but it's also about being able to do, as a small business, as an entrepreneur who needs to focus on selling, on generating revenue, to help with everything that goes around it, right? I think big established banks don't really have the bandwidth, and the cost to serve the small entrepreneur is too high. So these digital banks are able to bring everything from HR, from connecting with your suppliers, that richness of data as well, to provide some of that underwriting that you could potentially get and interesting prices as an entrepreneur to help you with that cash flow. So because of all of those reasons, I think on the wholesale banking piece, there's a really interesting value proposition. I think on the retail side as well, it's also pretty interesting, right? One of the reasons that the MAS did this is also to encourage competition and also push for innovation. The more, the closer you have your threat to the backyard, the more it encourages to innovate and to and to serve better the customer. So in the end, it'll be better for us. As well, I like to tell a story. My mother-in-law in the UK, she's a doctor, so you're a GP and a partner in a GP, and in one of her travels actually to the region, she signed up for a Starling bank account. So I think it was about 3 or 4 years ago. She did the whole summer. They did as a family. They went to Australia, then we went to Vietnam with them. She came to Singapore. She did not have a single issue with her Starling account. And every time she's traveled before with an incumbent, she's always had like her blocked account, something didn't go through, et cetera, et cetera. So that encouraged her to basically pass her entire account as a GP, so not your millennials or your workers or your underserved, to move to Starling Bank, which I think it's an amazing, amazing story. And potentially there is the potential that to happen as well, is as the brand gets recognized.
So yeah, but it seems like there's going to be a lot of brand development that will have to happen, and it will clearly be interesting to see how the incumbents take off. I heard that my audio isn't great, so I'm very sorry if that continues. I'll try to sit even closer. So Anthony Morris asked if there are lessons to be learned from other markets to build the trust. So Jojo, what other markets are you looking at? You talked about Cambodia when you're thinking about how to build trust for the digital bank in the Philippines.
Yeah, I think my experience from both in Latin America, where I launched a FinTech product in Argentina, in Mexico, in Peru, in Colombia, and in Brazil, together with my experience in some countries in Africa, and also Cambodia. The basic when we deal with the unbanked, trust is a very important aspect. And as I mentioned earlier, it's too late when you find out that this unbanked have basic characteristics relative to their behavior towards money, towards cash, right? So in Cambodia, we found that out after the previous founders of Wing Cambodia really sought out to do wallet, and they found out that there's not so many users. And again, the trust of the people on themselves to really do the transfer, to really do the payment, it's very, very minimal. They don't trust themselves, but they would trust others. So that gave us a very, very good idea that we bring this to the agents and let the agents do this for them. And then I went there 2016. When I left 2019, Wing was the volume of transactions that going through the Wing system across the entire Cambodia was about $24 billion. And the GDP of the country was 21 billion, right? And Wing is one of those successful companies that are basically making money. That we were doing 38% EBITDA. And and there's money at the base of the pyramid, so they say. In Africa, that was also the same thing. When we were introducing a lot of new products and services, we always make sure that the trust component is there, and also the trust component is not necessarily on them; it's also on the agents. That's why, if you notice, in Africa, there's a proliferation of success because it's being run. The digital transactions are being run across the agents. I think it's the same thing that's happening in Indonesia. Right now, Indonesia is one of the biggest markets where there are more mobile wallets than mobile phones, they say, right? So, and this is the phenomenon that we would like to take advantage of. But again, for so long as we're not able to get the trust of the people to use a utility to facilitate a digital transactions, I don't think they'll be putting in their money there. So I still believe that there's a lot of room for us to accept that cash is still king, but it's a way by which we manage it so that we are able to achieve at least our objective of increasing this digital revolution of use of converting cash transactions to digital transactions.
So Karen, I mean, you're in the midst of this competition and you're hearing what Pauline and Jojo have said. Who do you think is, what types of institutions are going to be looking at the digital bank in Malaysia? And is it going to be the banks thinking about a second license, or the wallets, or are you having some unconventional players coming in as well? Unconventional for financial services.
A few of the incumbent banks already come out and said that they are not interested to apply for another license because technically they are already putting a lot of their products on the app. And then I must say, Maybank is doing a great job. I've been with Maybank since I was 12, I think. So they have very good features, and then they have the trust factor as well. So it will be very challenging. But I think by talking to a lot of companies and the consortiums and the central bank people, is they're trying to see each of the sector needs to be served. So for example, for the B40, they would need help in the cash management, cash flow management, or enable micro savings or deposits, even like the micro insurance. And then the M40 and the T20, which is the top tier, would be looking at emphasizing on the convenience and then value add products and services from a lifestyle and advisory perspective. So like, for example, if you see Luno Malaysia, they recently announced that they have asset under custodian breaching above 1 billion ringgit. So the adoptability is there. I think the good news is there is a tremendous increase. For example, on the year-on-year increase of the e-wallet transactions has improved by 130%. And then there's a 49% increase in online banking transactions. But I don't think this is due to the willingness. It's more of what the pandemic is forcing the people to adapt faster.
You just said that you've been with Maybank since you were 12, which is like most women, I would say, who have one bank account and they stick with it for a very long time. So what do you think is going to, and you said women are financially more excluded, or it could be an interesting segment. So what will it take for someone like you to leave Maybank to take on a digital bank as your main account?
I don't think I will be as brave as Pauline's mother-in-law. We have this conversation with my husband that he said, I don't trust FinTech companies. I mean, how can I trust young punks that wears t-shirt and jeans? And I told him that maybe FinTech is not for him, but it's for his children, his son, who is the next generation. And then this is where the millennial conversation comes in. So in my previous life, I was with Razer FinTech and part of the team to look into the digital bank application. So the conversations around the millennials and how do we help them. So you're looking at children starting at 12 years old who's a gamer, taking some money from the parents to buy game credits. And then also because of the ecosystem in Malaysia, Razer FinTech works with 7-Eleven. So you will see from the data that the peak of the transactions for this younger generation is between 12 midnight and 4 a.m. And they don't have credit card or debit card. So they will go to the convenience store and buy the top up for their games, right? So if you were to be engaging them from at this age, and then you look the transition when they grow up, first job, get married, buy house, and retire, you can live and die with one bank account. I think just like what I'm going to do with Maybank.
Well, Maybank is very lucky. All right, we have a question about an SME digital banking and how easy is it to acquire customers and build products for SME banking? Pauline, did you look at this at all when you were working on the Singapore one?
Yeah, so look, I mean, we especially when we did the study, I think one of the interesting pieces, especially as we're looking to consortiums, is the fact that these consortiums can bring telco, retailer, e-commerce, even supermarkets. They already bring access to customers, access to SMEs, digital users in the case of Razer, right? And even in the case of Razer, like you do have mini entrepreneurs in there, right? And you have already that frequency of interaction with the entity or digitally, and also the richness of information that you can get. So for example, on the ride hailing side of things, you can provide a credit line to a supermarket based on data, knowing of the orders that you're getting on food, right? You can then, as a result, understand, your supply chain, and from that supplier, what else can be done. So, it continues. I think the key, it's less, I would say, about the acquisition. It's more about the end-to-end servicing. I think the SME will now expect a lot of these pieces to be interconnected, right? So everything from your paying your invoices, paying your employees, part of your accounting. And I think actually there's a really interesting company here in Singapore that it's not like quite, it's a fintech, but in a sort of different way, called Seek here in Singapore, that basically when you come to and you open a company, you need a company secretary and somebody to help you do all of those things. They offer a lot of that functionality. So imagine that if this company is able to, you're already, if they're able to provide a corporate account, they know your outflows, they know exactly, they know your inflows and your outflows, everything from the rent that you're paying, your suppliers and your employees. And that for me is it's where the key is. But I just wanted to take it a step back as well in terms of the, and it's in the report that we'll share after. I think if you put it into context, right? I mean, a lot of people don't really understand obviously we know we're in Asia, but we have so many big blocks in Asia, and Southeast Asia, the opportunity is just huge, right? In 2030, we are basically scheduled to, from a GDP perspective, to bring $4.3 trillion, right? And then from a population perspective, 540 so million individuals, the fourth largest bloc in the world, after the EU, India, and China, right? So it is, when you look at those numbers and then you look at the numbers of the underbanked or unbanked, which Jojo was mentioning, I mean, Malaysia has actually been growing pretty steadily. I think we checked some numbers, and in 2011, Malaysia had something like 66% of bank account penetration. All of a sudden, by 2017, had 85. But the Philippines, Indonesia, Thailand, Vietnam still remains low. And definitely an opportunity for these digital challenger banks.
Yeah, definitely. I mean, there's lots of opportunity, but it will be interesting how, to penetrate into getting to be just the same way as in Hong Kong, kind of the lead bank account. So Jojo, we have a question about kind of competition from wallets. So if you look at, for example, PayMaya or Gcash, which are the Ant and Tencent kind of supported institutions in the Philippines, how will the digital banks compete with these wallets that are linked with e-commerce, or how will they, how will the digital banks supplant them?
Yeah, so thanks for the question. But can I just get back to the SME banking thing and basically go to this, because I think that's related. No, so our look into SME digital banking can be from two perspectives. One perspective is that how can a digital banking facility help improve the business of SME, right? Because that's really what they're looking for, right? How do I improve my business using these new tools, digital banking tools? So in the Philippines, I don't think we have reached that yet. We're still in the process of saying, how can I get my business to be better, on its own, even without these tools, right? So I think the ability of digital banks, virtual banks, to really penetrate that mindset or behavior is to really create other opportunities by which they can first experience an enhanced business. We have about 1 million sari-sari stores, or maybe mom and pop shops all over the Philippines, but they're earning on average about $50 a month, right? Net in $50. How can they make the 200, right? So what we normally do is that we use the opportunity to look at the supply chain by which they get connected. They get connected to distributors, they get connected to third-party players, they get connected to all of this. And that is probably where you will do the digital banking thing, right? In Cambodia, we made sure that most of these SMEs, when they connect to FMCGs, when they connect to other wholesalers, we find out the pain in having to bring cash every time and wait for the delivery persons of Coca-Cola, and then exchange cash. So we put that digital facility there, and it became very, very useful. I'm bringing that to the wallet description now to say that I think for now the wallets and digital banks will coexist in the bank sector, right? In the bank sector, because currently Paymaya, all of these wallets, they exist because the transfer of money to the wallet is done electronically through their bank accounts, right? But when you bring this to the unbanked who don't have bank accounts, you will have to have a facility by which they can put their cash or their funds and then put it into the wallet. And that's the first level. The second level is that, why will I put my cash in my wallet if the facility which receives my cash also does money transfer, bills payment, all of the things that are put into the wallet? So those are two different scenarios that we are now experiencing. Right now, the success of GCash and Paymaya is really built around its cooperation and collaboration with the digital banks and virtual banks. Why? Because it needs a transfer of money to the wallets. You need to really make sure that the wallet has funds by which to use for all of these transactions.
So it sounds like the question is more, once the digital banks come in, will the wallets stay around? I guess you could look at that and think about that in the Hong Kong with the digital banks coming in. Wallets such as PayMe, how prevalent or they continue to be, which will be an interesting thing for the Hong Kong FinTech Association to look at. Pauline, there's a question about regulations. I'm just going to read it because, could you please share challenges around regulatory requirements in some of the ASEAN countries? Like Hong Kong require the data sits within Hong Kong and the third-party auditor. Singapore may limit the maximum amount of money for digital banks in the first phase, and Malaysia also has these. So, how much tracking of regulatory challenges do you see going on, or how much do you think this is limiting digital banks in the region?
Yeah, so look, I mean, I think where you put your data in the region it's a topic that's it's a painful topic for anybody in financial services, or even outside of financial services, right? I mean, it's in Indonesia, for example, it's the telecommunications regulator that basically requires you to have all of your client data onshore. Right, so the onshore, there's nothing you can do if you're an existing institution and you want to even do an upgrade of your Outlook. You can't do it if you don't show a path to onshoring that client information. So there are a number of countries that that onshoring requirement is pretty painful. I think in terms of the requirement in Singapore in terms of the amount of cash that you're able to keep, it's kind of like a stage gated approach, right? To make sure at the end of the day, from the MAS perspective and their supervisory mandate, to ensure the viability and remove risk from the financial system in Singapore. I think as well, one of the pieces that I also, I think it's really interesting, mentioning as well Grab and wallets. What's really interesting about the Grab story is that they didn't mean to go into financial services. The only reason that they brought in a wallet was to basically compete against the high prices that you basically you were charged. Initially, they were competing with Uber, but the high prices that you were competing if you were using Visa or MasterCard. So they moved into this space to be able to do that, and it's a similar story in Asia, right? It's through the mobility industry that they're basically bringing in financial services, embedding financial services to be able to do a lot of these transactions and not have, if you don't have a credit card or a bank account, be able to still be part of that digital economy without being in the banking system, so to speak. But yeah, so in terms of the regulation, I think onshoring data, it's going to be an interesting challenge. As I mentioned earlier, for our players in Singapore, I mean, they did not launch in Singapore to focus on Singapore. For them, it's a stepping stone into the region as well. So it'll be interesting to see how regulators manage that piece around data and to allow for others to expand as in the region.
And you see, I mean, Jojo, Karen, do you see any regulatory challenges coming forward in either of the regulatory frameworks that have been issued to the Philippines or Malaysia in the same way?
I think this is fairly new to our regulator, and I think in a way, this is a sandbox, a project for them. But because of the experience that they see, maybe I'm sure they're comparing notes with the different central banks in the region. I think at some point in time, they're giving us 3 years by which to if you're a successful applicant, they give you 3 years by which to fulfill what you promised to do relative to the digital banking proposition that you have. But I think this is also the period where we can test and learn, we can experiment, and will probably this will probably be a basis by which the final guidelines, rules will be drafted. We're probably guinea pigs in this game currently, but I guess the objective is that how does it work really for the unbanked, right? So
yeah. And actually, I've just pulled something as well, if I may, just on the regular. Oh, we're about to close down, but we'll make it available on the report. We did a whole piece around as well the licensing requirements across some of these big regulators, and which covers everything from cap on the number of licenses granted to the market segment restriction, et cetera, et cetera.
All right, and Karen, what do you think about the regulatory situation for Malaysia?
Okay, so Bank Negara issued the framework for digital bank, but what comes behind that framework is actually the Financial Services Act and the Islamic Financial Services Act, and they have to fulfill that on top of the digital banking framework, right? What would I like to see is actually a hybrid of both. Because if you look at the Islamic Financial Services Act, it provides a window of innovation and products that if you use the Islamic contract, you can create a lot of innovative products for the financial environment. And then by virtue of Malaysia's population is more than 70% Muslim, I think it will bode very well if they go to that route, the hybrid route.
All right, so now I guess we're about to close out, so we have I'll ask the final question, which is about breaking even. I think this is something that is very much of a focus in Hong Kong, and referred to some of the digital banks. Often people here using their digital bank accounts as their second account. But the question is, like, realistically, how long will it take to break even for the digital banks? So Jojo, how long do you think it will take in the Philippines?
It's a very difficult question, but it's normally asked of you, right? So from a perspective of making projections, we were looking at it between 3 to 4 years. Although in Cambodia, we turned it around in 2 years, right? And then we sustained it. In Africa, it took them longer, but yeah, for purposes of making this really a viable initiative for my investors, the period is normally 3 to 4 years.
Pauline, what about Singapore?
So I think we've been asked for 5 years to get to that profitability, and obviously in terms of what the revenue streams are, it's They're everything from transaction fees, subscription, and marketplace model. But yeah, 5 years. We have seen those, like some of the leading examples, and again, going back to Starling Bank, who became profitable last year and partly helped with the whole COVID situation. It took them 7 years.
Mhm.
But it sounds, Jojo, sounds very promising on your side, though.
And so Karen, you have some players that have the digital license in Hong Kong and Singapore, and Malaysia could make them into a kind of regional player. Do you think that, you could think about Shopee this way, or you can think about Ant Financial or a Grab. Do you think that Malaysia is looking to be able to kind of do that kingmaker experience by giving some of these players their third and turning them into regional large players across ASEAN, or it's going to be looking at more of how to promote on the Malaysia side?
I'm not sure, because the last I heard there are at least 48 consortiums looking at applying. So you can imagine the variety and their focus. Yeah.
So I do think, as Jojo said in this, that there are a lot of experiments that will come out, and we're going to see how it plays out with some of them when they're going for their third or fourth country, what that means for them. All right, I think I'll turn this over to Anthony to close out.
Oh, that's very kind of you, and wonderful session. Thanks, Jojo. Thanks, Pauline. Thanks, Karen, and of course, as always, many thanks, Rachel, and thank you for pulling this together. This is as you mentioned at the beginning, your last session with us, so we'll be very sad to see you go, but look forward to collaborating with you with the FinTech Association in Singapore. So thank you, everyone. Yeah, really
Thank
great
you,
session.
everybody.
Thank
Thank
you.
you so much. Thank you.
Thank
Thank
you.
you. Have a good evening.
Bye-bye.
All right.
Bye.
Bye.
Bye.